I am excited to share this one. It's been a long time in the making, and this is one of the most important disciplines you will ever have to learn when you are an investor or a trader, because remember, you will never go broke taking profits, but you never succeed until you do. So let's jump in. Let's talk about this model. There are a number of different settings in it. I always say find your rhythm, find your style. We made this cater to every trading style. And it's very much tied to things like what type of assets you play with. You can tailor the settings to the actual trading style that you have, whether it's very aggressive and very aggressive high vol assets like crypto, or conservative assets like indexes, foreign exchange, commodities, and everything else in between. And I'll show you a lot of examples of how I use them. Also, your trend bias. You can choose a longer term trend or a recent short-term trend or a neutral trend, depending on the volatility of the asset of late. And also, you have layers. You can have 5 layers, which is what I like, which is less, or default number of layers, which also helps you identify things like stop loss or layer in layers, and also more layers all the way down or up, depending on where you are. Now let's look at this indicator. You can find it in your invite only. And in addition, there is a couple of key things that I will walk through here as to how you configure it. One is you have an anchor, as we call, to simulate your situation and expectations. You could play it through different points in time and get a feel for how the model works at different prices, at different levels of volatility, different trends, whether downwards or upwards. Very important. The trend is your friend. And therefore, always keep an eye on the trend and never fight the trend as well. Let's talk about how you can drag the anchor. You can drag the little blue button, or you can actually manually enter the date itself. You just hit the cog on the indicator and you go into all the settings. It's very important to get familiar with those settings. You can see here you've got your select your date, your trading style, your trend bias, the labels, the width, the color schemes, whether you want them bright or highlighted, how wide you want them to be, as well as how many layers. All of that is in there, kept as simple as possible while keeping it very powerful at the same time. Now, a couple of keynotes. Remember, I build these things around how things have worked for me. I have been successful for a large part of my life. But just to talk about this as well, my strategy is always 70 to 80% hodl and hedge. And that means I have a big bag of certain assets, and when they hit tops, get frothy, I hedge them, but still hold them. And then 20 to 30% is trading. This layer out model supports both hodl and traders. And also you can figure it around your own style, your risk tolerance, your time frame, your targets, your cost basis. All of that is very, very important. And remember, the model also takes into account trends, recency, volatility, Sharpe ratios over multiple periods, support and resistance levels that we configure. But remember, it's not a crystal ball, but it is an optimized profit taker, and it is unique in the market. Nothing like this exists anywhere else. And that's why it took so long to build. So let's talk about my profit taking methods. Again, find your own rhythm. I just want to share some of the things that I do, and a very good way of framing up how to approach this science. Again, my goals are not your goals, but here are a couple of things you can do with Bitcoin as an example. So for example, with Bitcoin, imagine your cost base is 17,500. You've got your 10 layers. There's a couple of things you can do. One, you can sell 10% of your bag per layer. So if you have 1 Bitcoin, you sell 0.1 of a Bitcoin every layer up. The other way is 10% of your initial investment per layer. Take your initial investment off the table. If it's 17.5 is your investment, 10% off is 17.50 every time. Then the third way is 20% of initial investment per layer. And you can see here, you will still have a bag left in both 2 and 3. The fourth method is 20% of bag per layer, but only using 5 layers. And the second method is 20% investment per layer. Okay, so it's a lot to talk there, but that's a good way to frame up how you optimize your profit taking per asset. So with the first case, you can see here, profit taken 63,789. We leave 71,000 on the table if Bitcoin goes to 135,000. Second method, we bring out $102,000 in value. We leave 32,000 on the table. Not bad. Third method, we take out 69,000, we leave 65,000 on the table. Not perfect. Fourth method, we take out 93,000, we leave 42,000 on the table. And the fifth method is the 20% invested per layer pulled out. You can see here, we pull out $124,000 in value, leave only 11,000 on the table. So just some ideas. I will share this model so you can configure it for yourself as well. But it's a very good approach to take. And there's also other ways where you can make ratcheted up profit-taking layers, either at the bottom or the top, depending on how aggressive you are about the asset. Now, another thing as well, what I like to do, and this comes from my gambling experience. I used to gamble for fun in the 90s. I used to fly to Vegas every weekend. And I played craps most of the time, and I used to play a lot of online poker as well. But I had this very simple method, and I want to share how it worked for me. First of all, my budget was $300 per day I could bring to the table. If I lost it in 10 minutes, that was it. Gambling was done for the day. And I have another $300 to come back the next day. I never, ever lost 3 days in a row. Second, what I started doing was after I made over, say, $600, I would take my initial $300, put it in my back pocket quietly, and literally, if I got wiped out again, I'd still be ahead. Never, ever try not to lose money gambling. And that was my obsession. That was my risk management. And also, typically every weekend, I come away with at least $3,000 in profit, sometimes a lot more. I remember one time I made over 10 grand in like 10 minutes. It was insane. But the way I did that was I played aggressive with the table's money. So always try to remember, take your initial investment off the table and then play aggressive with the table's money, with your profits, if you can. So a couple of things I did was like hard sixes, hard eights. The payout is typically 9%. Hard fours, hard fives made 11%. And I played the C and E as well. So for those of you who play craps, you know what that is. My edge was about 11% on that too. So let's jump into some charts. Let's look at the settings of Bitcoin. We're going to go through a whole bunch of stuff here real fast. First of all, these are the layers for Bitcoin and the settings that I have and the anchor point that I chose, which is about August 2022. Here you can see I have an expectation that in a crazy bull scenario, we could maybe hit 140,000 over the next 2 years. Okay, most likely probably around 100, maybe 130, but that's it. But I have configured these levels, well, the system chose them for me based on my expectations and my style. So the Bitcoin is set up as very aggressive with the long trend and more layers. And you can see here, depending on your profit-taking style, you could actually be taking profit at 30,000 already, even 24,400, depending on who you are. I will be holding on a little longer, of course. I think the first time to take profit would be closer to 40,000 for me, and then all the way up. And also, I'll show you a little trick later that you can do too with crypto. Next is Tesla. I'm talking about my big bags, big positions. And somebody within the community asked me this question this morning. At what level should I take profit on Tesla? My cost base is 106. I nailed the bottom. And where should I layer out? So according to this model and my settings, which are very aggressive, long trend, less layers, and the anchor point is today, I would maybe, if I was in your shoes, start taking profit at $214. Then $280, $387, all the way up to nearly $600. That's where I believe Tesla could go. And remember, it's already been to over 400 not too long ago. Next in the box is Google. Here, the settings are very different to Tesla. It's a neutral trading style. The bias is longer trend and less layers. So you can see here the first layers of when I plan to start hedging or layering out or selling some of my position to allocate somewhere else. Next is the S&P 500. I'm obsessed with this. I look at it all the time. And it's a good place to kind of hedge your holdings. I thought about hedging it at 4,100, then decided to up it to 4,200. And you'll wonder where that number came from. But if you look at this chart, you'll see the number is 4,194, just shy of 4,200. And again, the model determines this, not me. It takes all the math that I have to do behind the scenes away. It does it automatically. And you'll see here as well, the top for the next 12 months could be as high as 4,800. The bottom is 34.91, but the layers only go down as far as 38.17. And again, very conservative, neutral trend, more layers for the S&P 500. Next is NVIDIA. NVIDIA is my AI play. In fact, all of the disruptive stocks I invest in are AI stocks. Tesla, Google, NVIDIA, Meta. There's a method to my madness, but that's what I believe is the highest growth for the future. And here you can see neutral, long trend, more layers, and the price going up, the final layer, nearly $400. And I believe that is very achievable as we go forward. Next, Ethereum. Very aggressive, long trend, less layers. Now my plan is to exit at about 5,000 or just under 5,000 and reallocate to other layer ones that have not run yet, or are an extreme value in relation to Ethereum. That's kind of my plan for this one. Now, Matic, this one I hope to be out at 3. I have a small position, and I can hear you all asking in a minute, where's Solana model? Well, you're going to have to find that out for yourself. But here for Matic, again, very aggressive, neutral trend and less layers. I didn't go long trend on Matic because it has a relatively short history of activity. So I went neutral and less layers, and you can see it takes you all up to $3. And in fact, if you look at my should I sell model for Matic, these layers are not that different because the same method is behind, but now I'm sharing the model with you all. Next, I want to emphasize a little trick here. This is for the short-term traders amongst us. You can see how this tool can really be helpful, not only to layer in, but also layer out on very fast, super volatile squeezes, and also get back in dramatically and increase your bag size. It's kind of like scalping, but with a layer out model. And you can see here, per this model, all the key layers of support and resistance. As we go up, it would have hit all of them in a very short window of time. So you could have exited all the way up, and now you can start accumulating back in again under 14 cents. And you can see here it went up through the 11 cents layer, the 14 cents layer, the 18 cents layer, and the 20.4 cents layer. And that shows you the beauty of this volatility and how you can use the system to identify optimal points to get in and get out, and then get back in again if you want. That's the special trick. And all of this happened just this year. So we're talking less than 6 weeks. Now, oil, very conservative, long trend, less layers. You can see here my range for oil, $81 to exit all the way up to about $113. That's where I see it going over time, especially as we go into recession, the demand for oil will be down. And that doesn't mean the oil price can't fall to $60. Definitely can. And that could be a good place for a bottom. Now, gold, very conservative, long trend, less layers. And here, the model gets you out of gold at $21.35. Now, I know a lot of people are talking about $4,000 gold, but hey, I've been watching it for nearly 12 years and it's gone nowhere fast. In fact, it's gone backwards, which is not good. And copper, another commodity. I believe in the electrification of copper, so I'm going conservative, long trend, less layers. And again, bullish in copper because it's in demand, but it is a resource that is kind of out there and it is quite volatile lately. So, and you can play with this with uranium and other names as well as we go forward. So I just want to summarize real quick. Remember, this is both an art and a science. Higher vol assets need more aggressive strategy. Low vol assets need a very conservative strategy. Use your price targets, for example, Bitcoin to 100K or 130K in 2 years. Simulate your cost basis, and the goal is to bank profits and allocate elsewhere. There is always a place to invest. And the trick, as I showed with the graph, take profits and layers and re-enter on dips at lower layers. And the model is designed to get you out of weak assets fast and keep you in strong assets. And remember, the trend is your friend for certain assets, as we showed back here. I think it was with Google. Google, when you have the trend going up as blue or reversing, that can actually tell you when to stay in a trend or get out of a trend, maybe keep you in a layer. So with that, everybody, hope you enjoy the model. See you soon. Thank you.